Welcome to Planetary Health First, Mars Next. We got an amazing, esteemed panel today, and we're going to be driving home, raising the right funds, navigating the investment landscape. And we got an acquisition person here. We got a super raiser here. We got different levels of startups, great people, and we got a venture gentleman here that's no stranger to doing all things. So let me just quickly introduce our esteemed panel. We got Tom Kluz, that's 20 years seasoned VC and currently running a $100 million corporate venture fund. We got Kristen Valdes, who is the actual CEO of Be Well Connected Health. We have Jennifer Blumenthal, the co-founder at One Record, acquired by Milliman IntelliScript. And we got Ophir Ronen, CalmWave CEO founder. And so let's just start it off. Where do we want to go today? What is the most important thing when raising capital and funds? We should probably start with the person who's going to give us money. I think the most important thing is, Tom, let's start with you. What do we need to know? What do people need to know when they're raising money?
Sure. Well, I think first question is, who's raising money? Are we talking about the venture funds? Or are we talking about the startups? Obviously both need money, and it is a tough climate out there for anybody raising money, whether you're on the fundraise side, if you're looking for LPs, if you're a general partner looking for LPs, or if you're an entrepreneur looking for venture capital dollars. It's a tough climate, but I think my first piece of advice to folks is kind of know your audience, have your storyline buttoned up, really define your unique value proposition to the market. It's a very competitive marketplace out there, and so money's tight, and so you really need to exceed the next pitch that investor is going to hear. So I think it's define your unique value proposition and know who you're talking to. I think a lot of folks, when they fundraise, they don't do that.
Awesome. Would one of you want to start? I think it'd be great to round robin, just kind of your experience, your skid marks, your scar marks, how
Sure.
You got through that experience. And who would like to start from the raising side, the founder?
I'll start since I'm doing that right now. So I'm Ophir Ronen. I'm CEO of CalmWave, and CalmWave remediates ICU alarm fatigue, of which there is an enormous amount. And if I look at the fundraising environment, as Tom said, it's really brutal right now. When you have 1 or 2% interest rates, fundraising is much more straightforward. But when people can get 8-9% at the bank, then that causes a really difficult place. Like for me, we're doing something that no one has been able to do ever, despite decades of effort, which is to safely remediate alarm fatigue in ICUs. And we're a stellar team combining expertise from enterprise IT operations and clinicians and physicians that are all coming together to do this. And so the problem is that, one, we're in healthcare, and healthcare in general has long cycles. But then two, with this really tough environment, then you really need to find the right alignment, right? So for us, we're certainly digging into folks who have skin in the game, which is, hospital investment arms or otherwise. So I think the key is define a really, really solid problem that you're solving, and then also, back to what Tom said, find the right investor, right? An investor who understands the context.
Awesome. Kristen, Jennifer, would you like to add to that?
Kristen, you want to go first?
Sure, happy to. Yeah. So, I absolutely agree. I think this climate right now is difficult, period. In our space, it gets a little bit more complicated because it's very hard when every company and market is using the same terms and words. And there's a lot of variability between them. So I think that the most important thing that I've heard is know your audience, right? And I think Tom said it well, because you have to understand that not all capital is the same. And so even when you have a compelling problem and you have a solution to that problem, you've got great traction, high number of lives, great outcomes. If everyone's saying that they're doing the same thing that you are, how you differentiate that is really important. And in my experience, seeking out investors who have really dove into the space that you're in, understand the context, understand who the players are in the space, and can ask really intelligent questions around how do you differentiate from this organization or that organization. When you can clearly state those responses, it makes it much, much easier. But I would say in this market climate, it's also for us really digging into our strategics, because they are the ones who not only pay our bills, but are doing a lot of the work with us. It makes it a little bit easier because they know that they have regulatory guidelines and compliance that they have to hit. They know that they are not building these things internally because they don't have enough time. So the pain points actually are felt by the people that you're talking to. And so those, that have investment arms, whether they are payers or providers or, technology companies, but folks that are really invested in your space and know it well, I find that the fundraising climate is a lot more friendly for.
That was very good. I agree a lot with what Kristen said. For me, I had a kind of a weird experience, a weird journey to where I'm at now. But if I was to give advice to someone starting out, the things I tell them is, first of all, you have to have a clear business and a clear growth trajectory. It doesn't matter what the product is. Can this be a business or is it just a feature? You hear that a lot in the product world. And then I tell a lot of people who are raising or wanting to start companies, I'm like, do your homework on the investors. Like, figure out who's investing, what their thesis is, what companies they're investing in, what the backgrounds of the investors are. Have they only been on the investing side? Did they actually have their own startups, go through the whole, 0 to 1 experience? And then I also tell people, like, is it the right moment for capital? Like, can you grow without investment yet? Like, when you take on capital is very important. And then also, what's your exit plan? I think people should really think about kind of charting the end of the company too, because that dictates a lot of your future.
I love what you just said, Jennifer. So I just recently participated in the Stanford Emergence Program. This was a couple of days of sort of intensive collaboration with other investors in Silicon Valley and entrepreneurs. And I was doing a kind of round robin a roundtable discussion with a group of investors. And we did a round robin of input about the fundraising ecosystem. And somebody actually mentioned, I won't name their name, but it was a really astute comment. They described venture capital as rocket fuel. Right? They're like, look, venture capital dollars, growth equity dollars are rocket fuel. Not every single vehicle / company needs rocket fuel, right? You can get by with bootstrapping, right? Growth equity venture capital is very expensive capital. You give up a good chunk of your business. Again, cost of capital is high on both sides of the equation, whether you're the investor or investee. And so it's really about finding the right fit for the investor and the company. There are certain funds, their rocket fuel comes in a different form, and it may be maybe a friendlier financial instrument, not as dilutive. It also might be a smaller check, right? But I think it's really, really important for companies to kind of reflect on the financial instrument that's going to fit their needs. And when I say financial instrument, I don't mean some of the technical stuff behind how you're going to structure the deal, but really who the investor is, what sort of value add they're going to add. They're going to give you money. Are they going to introduce you to commercial partners? And then reflect on, before you take the capital or even before you start the fundraising process, really try to reflect on whether it's possible to bootstrap for as long as possible, because I think it's I shouldn't be saying this as an investor, but I do think that sometimes it's too soon for companies to take investment capital from VCs. I think it's doesn't give the companies enough time to reflect on their core business model and their core business. And so my recommendation to any investor, if it's too early for me, is to say, listen, really kind of refine your business model, hone in, try to bootstrap as much as you can. Don't hire 25 people day one, right? That's rocket fuel will enable you to do that. but you may not be ready for that. Maybe keep it small, keep it lean, bootstrap as long as you can, and then go back out to the market and heck, get a much better valuation and a much better storyline for investors.
Yeah.
Something funny Tom just said that reminded me, a lot of times, a lot of customers of your business actually want to know what the capital investment is behind it, because they might not want to actually become your customer if they don't think that you have enough funding to survive
100%.
with them. So it's like, it's a chicken or egg situation of like, when is the right moment? And you could be passed over with a better solution, but the other company has more funding. And then the decision maker who is the customer might be like, I feel more comfortable knowing that they at least have 5 years of runway for me to work with them versus I don't know what your runway is. So
Right.
it's a hard situation.
I think it's
And
even
even-
more compounded in healthcare though, right? Because
100%.
when venture came into healthcare, it was with the, kind of booms of venture capital that were in tech organizations. And so they're really underwriting for a 5-year exit plan. There's no sustainable healthcare company that can do all of the right, business growth, being able to prove outcomes, being able to then have those outcomes to, because it's hard enough just to find those first early adopters who are believers, build those proof points, and then go through the very lengthy sales cycle timeline again to repeat it over and over. So it's not like the growth trajectory in healthcare is the same as technology companies, yet for some reason we're still underwriting the exit timelines as the same as those companies. So
100%.
everyone gets disappointed when the scale doesn't happen overnight like it does in other industries, but it can't. And so I really think we should start thinking about venture as finding the companies who are underwriting for a 10-year horizon or a 15-year horizon,
Exactly.
because they're a lot more likely to be successful and at much bigger, outcomes.
Right. And to Jennifer's point about, sort of, the folks that you're fighting as a startup going into healthcare, it's typically the incumbents, right? So you're going against Philips, you're going against GE and others like that. So you have to really think about how do you align, right? So that you're not just this, fly on the wall that's just going to disappear. So I think that's one. And to Tom's point, finding the kind of initial product market fit, it's not only minimal viable product, it's also minimal viable team, right? Like what is the tightest team you can have to bootstrap into the new space? And then finding the right investors, like, for CalmWave, our initial funding was from 2 primary investors, and that was Bonfire Ventures out of LA, B2B SaaS, which is what we are, and then Tau Ventures out of the Bay Area, that's AI healthcare. So you're going to be with these folks for a long time, right? So it's like, it's not just the money, it's not just the vehicle, it's also the people, right? Because these guys are partners. They're there to help you make this happen. So make sure that they're the right people. From my perspective.
I think no, it's really so Kristen, your point around, I think you said 2 things that really stood out to me. One, healthcare investing or digital health, right? Whatever we're calling it these days, I'm not sure. It's all just healthcare now, right? I think digital is table stakes now. But I think to your point, if you're investing in the health space, right, it's not your traditional kind of hits-based investing. So I think your point around where venture capital sort of emanated from, it came from deep tech, SaaS, et cetera, where the KPIs for driving successful exits were, were hits-based investing, and healthcare isn't really conducive for that. Sales cycles are much longer. The KPIs are a little bit, they're less ARR and maybe more lives under management, right? In sort of a value-based care sort of ecosystem, right? And so it's been, I think it's been a learning curve for, just putting my venture hat on. It's been a learning curve for limited partners out there, right? Limited partners who invest in VCs who are saying, give me my capital back pretty quickly here and let's go start the next fund, right? It's like every 4 years, let's launch a new fund. And so your other point around finding an investor that can hold for longer, right? The 10 to 15 year cycle. I think your traditional kind of LPGP structures, your traditional funds, not the best fit for that type of style investing, because those funds are looking to deploy in 4-year increments, and they are looking for an exit every 4 to 6 years. And let's face it, invested in dozens of healthcare companies now, and I don't think I shouldn't say that. I've had a few quick exits, but most of them are, they're certainly 4, 6, 8-year kind of cycles, right? And there's more 6 to 8-year cycles than there are 4-year cycles, right? So, I think there's opportunity for kind of disruption around how you invest in these companies, and I think that flood of tech investors who came in to do digital health or healthcare are kind of second guessing themselves, and they're not putting as much capital into that space. But it's been the trough of disillusionment is here. So,
well, that's why, from my perspective, like the focus is really on sort of hospital system venture arms, right? Or folks like Aurora Forge, who they understand that healthcare eats startups, right? They don't give them the time to show the potential of what they're offering, right? So I think that's really important. And back to Kristen's point, it's not just long sales cycles, it's also long onboarding cycles, right? Because you have to do the integration work, like we integrate to Philips and to Epic, and you got to do nailed up VPNs between you and the system. So all of that takes time as you kind of spelunk through the systems to find the right people. And so, I think that the entry point into healthcare is really hard, but once you get in, it's fascinating because there's all this data that you can work with, and there's all this potential, and the long-term strategy, once you're in. So you can build that book of business bigger and bigger and bigger.
Kristen brought this up, working with strategics, and you just brought up the funds, the health system funds. Kristen and I both went through the AWS Healthcare Accelerator at the same time. It was the first cohort. And what was super interesting in that accelerator is they brought in a lot of the big health systems and their funds, and finding out where are they investing from? Is it off of the health system's balance sheet or something different? But even then, they were saying, and that was over 2 years ago, maybe 3 now, they were saying, oh, we're much better investors now. We're much smarter. Like, we have very clear metrics on what gets you in the door and what gets investment, because we already went through the first crazy phase of investment, and there were so much failures,
right? Whether
it was implementation, utilization, or just returns. So I think even the strategics are much more savvy now. That's my take. I don't know, Kristen, you're more actively involved in that right now than I am.
Yeah, no, I think first of all, digital health is not something that's been around for decades. I mean, we can all argue that, healthcare was very late, to digital health. And there was this conflation of, is it tech, is it healthcare? And the reality is that it has to contend with both, right? I mean, and we're not just dealing with, we're a heavily regulated industry, and the regulations that allow for digital health to be successful and at speed are still, in some cases, in the middle of deployment. The rules may have been dropped, but the enforcement penalties might not be, right? You have to remember that healthcare is full of have-tos. There's not a lot of margin, and so they wait until they absolutely have to in order to do something. So if the federal government delays that, right, and it's relying on a regulation, and that's what your solution is in, then there's no sense of urgency. Even if they're like, yep, you're the partner, you're getting in the door, but we're going to spend that money only when we have to. So, and we have to deal with, I mean, not to bring up COVID, because I think we're all a little, kind of tired of just that discussion. But the reality is that it's surfaced so many opportunities, so many challenges and other
100%.
things that we've had to deal with. But it also took away money and margins from what is half of the selling into healthcare. Like, they weren't buying anything that wasn't an absolute essential. And their focus wasn't on making this digital health company, successful in its implementation. It was trying to keep the lights on and figure out the staffing challenges, which are now overwhelming the system. So healthcare has a lot of challenges that are both headwinds and tailwinds that people have to understand. And so my favorite, and I don't want to pick on my capital partner friends, especially when they bring in phenomenal associates out of school, super smart and everything else. And they're like, what you need is predictability. And I just laugh. I'm like, yes, I too.
That would be great.
I dream of a day of predictability where my sales cycle timeline is repeatable. But the reality is that every entity you sell into is different. Predictability is unattainable. And once we start understanding that guiding principle, then I think Tom is right. The metrics should change. How many lives under management do you have? How much change can you actually impact? What are those lives worth in a lifetime versus what is your repetitive ARR? I mean, we have a customer who had to inadvertently change their EHR system, and that took their entire technology team. That didn't mean that they devalued us. It just meant they didn't have the capacity to work on it
Right.
in that moment.
That's right.
So, there's these ebbs and flows that I don't think we talk enough about, and they get used as almost criticisms of these companies doing really great hard work. And they penalize, unfortunately, from a financial perspective, companies, I think, unfairly, because they're not taking into any consideration the truths of operating in healthcare.
Very cool.
Can I just say it's so like heartwarming to hear all of you speaking about this, because it's like, it feels very, you feel alone.
This is a therapy session.
Oh my God.
It is
Not alone.
a therapy session, because it's rough. I mean, there's so much exciting potential in healthcare. And like the time, as Kristen said, like because of COVID, there's a really unique opportunity to come in and do really great things because there's more openness. There's also still a bunch of challenges. So especially, for me, coming from enterprise IT operations, which is where I've spent my career, coming into healthcare, there's so much learnings to be had, but also we have so much to bring in and help. So yeah, exciting times.
So I really, so Kristen, your comment about, so kind of going back to my earlier statement about the KPIs to track investments, right? And investors kind of being responsive to some of that. And you just brought up the kind of patients under management. And then Ophir's comment about,
It's Ophir, by the way.
Ophir, sorry.
Yeah,
Ophir's
no worries.
comment, apologies, sorry about that.
No worries.
Ophir, your comment about, strategics, right? Like Providence Ventures, for example, which is a fund I was at years ago, the corporate venture arm of one of the largest health systems in the US. And so I'd be curious to kind of just get everyone's feedback on this, given the entrepreneurial panel here. But in terms of those funds, specifically the strategics, right? We'll say on the payer side, the Cambias or the Echo Health Ventures of the world, and then on the provider side, the Auroras, like you mentioned, and then Providence and all that. How do you feel that how have those funds been in responding to this kind of need to, I guess, kind of adjust the KPIs and think about healthcare a different way? Have they responded well to the very healthcare specific intricacies that companies in the space face? Or are they sort of adopting more traditional venture capital models to kind of measure the performance of these companies? How have those funds been to work with, assuming you've had experience with them?
I think it's all over the place, and I think they're all different. And it depends on what they're managed by, who oversees and has control of fund decisions. My
100%.
earlier days, like my favorite, and by the way, I'm not negative on any of the capital markets. I'm just telling you our reality of what we fight up against. It's like
Sure.
we
Yeah,
also,
Yeah.
and in healthcare, we operate a lot out of, kind of fear and what else have you done and who else is like this and can I talk to them and does it work, right? So when you first talk to them, they're like, we need to see more traction. So then you go get the traction and the outcomes and you come back and you're like, well, we only invest in earlier stage. You're too late for us. And I'm like, okay, well, which is it, right? And so I would actually say that is more of a problem that we see with venture capital out of strategics, is that they want to be early in, but they're not willing to go first. Or early. Okay. And then by the time you get what they've asked you to, because every founder has notes around, this is what they're looking for me. These are the milestones they care about. You go execute on those milestones. You come back around. They're like, well, yeah, now you're just too big for us. You're just too late stage. And I'm like, okay, well, then there's this middle trough of funding that needs to be there because you're too early for private equity. You're too late for strategic funds. And you're in this like gray area of nowhere from a funding perspective, which is like where companies who get off the ground, who aren't those early failures that everybody's talking about because they went early and they're adjusting their metrics, the ones who made it past that and fought and climbed their way through, now there's no capital for them until they can get large enough to get through PE. So they're taking penalty after penalty after penalty in that phase, but they actually have a product that works with traction. So to me, I still think we're backwards in the way that we think about funding companies.
Yeah, and
100%.
You also have responsibility to the people on your cap table. There's a lot of decisions, are you going to do think about right after COVID or during COVID, like you could do a bridge round or you're going to do a down round. Like what Kristen was just describing, I felt that with when I was trying to raise. And I also think unfortunate that strategics don't want to lead. It would be so nice to see them
100%.
do that, but they don't. They don't want
Right.
to lead. They always want to follow.
Right. And they're the ones who have the most knowledge about the benefits of your platform.
Yeah.
So, yeah.
So that's the sentiment, huh? So strategics aren't. It's interesting because a lot of them are raising bigger funds and could be at a capacity to lead. They have the domain expertise, but they're not leaning in hard enough. Is kind of the sentiment, it seems.
Well, I'm speaking from about 3 years ago at this point.
Right.
Years ago.
But also,
Okay.
I mean, I think it's also who are they hiring for those funds, right?
Yeah.
What are their backgrounds? What is their risk appetite? I think that also plays into it. And I think they are getting more sophisticated. Like some of them are coming together as to create almost buying power to help make decisions across their whole portfolio.
Right. I would say in sort of current context, right, like within this year, and I don't have enough data points to say this is a trend, right? But I do have a data point, and that is, for us, we got a major customer that came in through their investment innovation arm, inbound,
Really?
where they say, hey, this is really interesting. We're really working hard on this problem. We want to dig in with you. And we went from kind of that initial touch point to doing a comprehensive deal across the system in 7 months.
That's amazing.
And for me, since I started Calm Wave, everyone has been excitedly saying, oh, you're doing hospital systems. That'll be 18 to 24 months for your deals. Good luck. So I'm like, beginner's mind. Okay. But this is one data point that is a pretty fascinating data point, which suggests that maybe, healthcare systems are trying to move faster.
I totally wish you well. I will say we've had health systems on enterprise contracts close in 4 months as a rarity, and others that take 3 years because there's an education. And, there's also, there's this other, kind of conflict, at least that I see. And as you can tell, I look at patterns, right? Which is that depending on what you're selling, if it's something new, i.e. startups were created to solve problems that don't have natural solutions in market today, right? That's just the baseline of why companies get started. Yet we align budget once a year to cost centers, to functions that might not even know that there are solutions to those problems. So they're not planning for them. And in many cases, the solution doesn't just touch one cost center. It touches multiple areas of the business, in which case, do those folks even talk to each other? Do they have the ability to merge budget mid-year? Do they have no, and no? So in many ways, even our budgeting cycles on the payers and the providers and the pharmacy sides of things about how big companies emerge, they're not flexible enough in their ability to say, yes, I need this, but I don't have this budget this year to do this, and I have to go try to figure this out. There is no way to bridge that to just get started, or startups are forced to let me land and expand. That's one of my other favorites.
That's what I was going to say. That's what we're doing. Yeah.
Right. But in many cases, what that means is, hey, you're going to not have any type of a margin. So when you do have to go out during a COVID situation and raise a bridge round or something, your land and expand isn't where you wanted it to be because you didn't get adoption for your full solution at the margin rate that you've proven. So there's also this other natural conflict that occurs. So for us, we get kicked all the way up into a C-suite decision. We are a CEO level decision, hands down. But you don't just get to walk in and sell to a CEO. So there's a lot of challenges, I think, with just the way that we have money available for funding. Because people say to me all the time, health systems have no money, go sell to the payers. And I'm like, okay, but you're talking about complexity that gets so much more, right? And it's fun when everyone says, oh yeah, this is where healthcare is going. Oh yeah, these problems exist. Yeah, we have these problems. We're not good at this. We need to do this. And then there's no way to pull together any form of capital or decision-making to make that happen. And so I think we're just up against a lot of challenges. So I give props and kudos to any company who has not only survived through COVID, is surviving at this point, and is at the point of even being able to get to, Series C, Series D, because they've had to fight their way through all of those challenges to get there, which quite frankly should tell investors everything they know or should know about the fortitude of that team.
100%.
Has anyone found a help to bridge the gap? We hear about innovation everywhere. Every health system has director, VP of innovation. Do they help accelerate that with investment or decision making? I'll stop there.
Man, yeah, it's a good question. I can just speak from my experience being mostly on the corporate side. So I've been mostly in corporate venture capital, some financial, and I would say that we would it sort of depends. If you're at an organization, there's two types of models, I think. There's models where ventures actually floats into innovation. So, for example, I report up in through the innovation arm. And yes, 100%, we could be the tail wagging the dog, or, the dog's wagging the tail, whichever way, right? So if innovation wants to champion something, they bring it to us. We evaluate it purely from a venture perspective. It's either a go or a no go from a fundamentals perspective. But there are times where we find something rock star fits the growth profile like a glove, right? It's got the J curve like growth, which I know, doesn't really exist. So I sort of do my own adjustment on that. But there's growth, there's repeatability, there's some land and expand, and as Kristen pointed out. We look for that as early indicators of whether a company's viable. If that's there, we can work with innovation to get folks excited. But you can't force it, right? The purpose, I think, of innovation generally is to make sure that the company is remaining progressive around that innovation curve without forcing something that's not going to work. So just because something's an investment doesn't make it innovative. So those are kind of my experiences. I've seen corporate VCs where innovation and ventures completely different groups, and I think that those call it VCs or CVCs or groups probably a little less connected at the hip and makes things a little harder.
I think that was a good answer.
Yeah.
Have you all, so a question for you all, right? I mean, look, BeWell's been, it's just like since I started in digital health, right? Like the word was invented, BeWell's been sort of kind of a godfather company of this space, right? It's really sort of I call it a beachhead company, and it's rode the wave of, the hype cycle. And then we're kind of in a little bit of a trough, but be curious to just kind of get everybody's input on, so what I just said, right? Do you feel that the venture team is your advocate, or is it innovation, right? Like what have your respective experiences been, right? Are corporate VCs good stewards? Are they quarterbacking it for you, or are you having to go through different channels to get to ventures?
I mean, I always tell people that I think ventures and innovation are a great way to get in and find the person who's going to champion your pain point.
Yep.
Otherwise, I think it's really hard to navigate. That doesn't mean that person has authority for budget and decision making, but venture is able to say, I'm going to match your problem with who I think who's most passionate about that in our business. And I think it's a great way to get in. Now, if they make an investment in you, I would say it's all over the board as to whether or not they are active, if they are helpful, if they try to drive things forward, if you're their top priority, if they're just working on other investments. But again, there's so much variability. But I always recommend to earlier stage businesses who are trying to get into companies that go talk to every corporate and strategic that you sell to, talk to their venture arms, talk to their innovation arms, because they're most likely to connect you to the person who could be your buyer. Otherwise, you're kind of navigating it on your own through research.
Or the person that will connect you to the person
Or
going
that
up the
person
path.
can switch roles too. They could go from a fund somewhere else to another organization. Like you don't know where they're going to go next to. I think a big part of it is just making those relationships.
Yeah.
The commercial contract that you got, right? That's like a bullseye, right? That's like a CVC's like ideal fit, right? If I'm able to invest in something and then you get there on a commercial contract, that's a big win for whoever the investor was too, as well as you. Did you, during that process, was the contract a condition to close, or did it actually kind of happen after the investment in somewhat of an organic way? Like what was that process?
I'd say the former, right? So what was interesting about this is that in our case, both the budgetary holder, who's the CIO for our product, and the person who founded the investment and innovation arm is the same person. So that helped. Cool. Because the budget came from both sides, essentially. What was interesting for us, though, is that it was actually the former, right? So it's still ongoing. What we're doing is we sign a comprehensive deal. It's set up with land and expand. So we do one ICU, and then we expand to the next ICU, and then multiple ICUs. And the investment is coming in tranches as we do each phase, right? Which is, that's fine. The thing that I find really interesting, and I think back to Kristen's point about the importance of the innovation folks, is that they're acting as our trailbreaker inside the hospital system, right? So like I've been doing a ton of work of spelunking to find the right networking person and the right like database person. And they're creating a curated list of these people we're finding, but they're acting as the people on the ground inside of the system to make sure the right ticket is filed and to like do all these things. But one of the big learnings for them and for us is that they were like, hey, what we've learned is we can't just go tell our IT folks, this is really important, go do it. We actually have to fund them because they're buried. So that was like a big learning for, everyone involved. So, we're sort of at that phase where we're really starting to understand how to navigate these systems because they're complex beasts. There's a lot of moving parts in there.
That's a super important point. And I think, while not specifically about the investment, but I think both Jennifer and Ophir both made really important points. Jennifer saying like, you should assume that your champion is going to switch seats. And therefore you need to build a team of champions inside of any enterprise organization, especially post-COVID. There's not any organization that hasn't had massive seat shifting, right? And all the way to like the leadership side of things. But the other thing is that, it's a really important learning that I think most people haven't figured out yet, which is if you're an executive level decision of here's where we're going strategically, we need to be doing these things. If you then just go tell your organization, hey, you need to go do this, and they were not part of the decision making, they don't have an understanding of what they're expected to do or what the outcomes are that are expected, and you didn't take away anything from their day jobs where they are already overwhelmed, then they're not going to be the advocate to make the project successful. So those who have figured out, like, I'm dedicating a team to this, this is so important to us, and the culture shift is from the top down, are significantly more
100%.
effective than those just that say, we've made this decision, you're doing it. Because then what the vendor is doing on the other side, right, is we're literally trying to pull the ship in the direction of the executive suite where they keep telling us where they want us to go. And that ship is pulling hard back in the direction of what they do every day. And they're going to question every single thing that they have to do because they're not bought in. So it has to be part of your culture. There has to be OKRs aligned to the company's success, not just the vendor's success. Then everyone has skin in the game and is accountable. And I honestly think that that's where strategic venture has a lot more pull than traditional venture, because the strategics will have the ability to say, okay, we need to make this part of our corporate goals and objectives in order to make sure it's successful. Because when startups fail or they're not successful in an organization, it's not always because of the tech or the startup.
Right.
In most cases,
100%.
I would say probably not. Are they perfect? No. But there are structures that are definitely that make solutions more successful in healthcare than others, for sure.
Big companies aren't perfect either. That's what I've learned too. So you always have to remember is what version of perfect are you looking for?
There is no
The one that you'll never reach.
Jennifer, could you share a little bit your acquisition? I think that would be really helpful to the audience. Just how that came about, if you would.
So I had started with one vision of what we were building, and I had every startup book you will ever read. I went through all of it. Like I read these things like, yep, that happened. Yep, I remember that, from like the co-founder quitting to like everything bad that could happen. And basically I started to pivot the solution from a B2C to a B2B model. And I said, okay, I'm going to give it this much time. And if we do not hit this mark, I'm going to sell the company. And so we were in the middle of a go live with a very large enterprise customer. And the stakeholder decided that this was no longer a priority. And I decided that was the moment that I would start selling. And what's interesting, this is what I like about the story. I think I like selling a little bit more than I liked building. But Kristen and I were going through the accelerator, and I was getting so much inbound from really good investors. And they were like, we want to move forward. We want to offer you a term sheet, like everything. And I was like, no, I'm sorry. I'm already selling. Like I am on this path. And basically I reached out we had a company reach out first that we went through diligence with, and I learned on them. And then that fell through because the market crashed. And then I sent out a letter to about 15 companies, and I offered them access to my data room. And I said, by this date, please, send me an LOI. And then you would make it to the second round. And then, I had the opportunity to let them bid against each other a little bit, but I chose to actually go with the one that I thought was going to close because I didn't want to get all the way to the altar and we didn't say I do. I like to think about it like getting married. And, it was a great experience, actually. Like, I feel like, building something from nothing and then selling it, maybe it wasn't the most successful business, but like I started from the beginning and I ended, and now I'm still getting to work on it and seeing what it's like within a bigger organization, taking the thing I built and trying to grow and fit it for their needs. That's also interesting. But I would definitely be easier for me to do it. If I was to start again and raise, I would be much stronger the second time around going in. I know a lot more than I did when I started all this. I knew nothing. I was absolutely knew nothing about anything.
I laugh all the time.
You're wise now.
Yeah, we talk about this all the time. I'm like, I totally get why early stage investors invest in serial entrepreneurs.
Yeah.
Right.
Because it's like you do, this is my third startup to scale up to exit, but this is the first one that I've done solo. And every phase of those, is different. But I tell people all the time, I feel like I fell into every pothole along the road and had to like painstakingly climb my way out of it. And so a lot of the give back, and Jennifer does this too, is we now advise and sit on boards of earlier stage businesses because we went right before them, because we can help them just glide right over, those potholes, because we want to see things be faster and better and more successful, because it's in everyone's best interest if digital health as a category is successful, because then you get more money, you get more innovation. And we all know that there's a million things to fix in healthcare. So if you take the broader view, right, it might have been hard and painful. And Jenny and I have each other on like speed dial because I'm like, gosh, have you dealt with this? Nice. Have you dealt with that? And it becomes a community. As long as you take the perspective of, you don't have to be so private and insulated like tech, you can actually share information and help each other go faster. And it's better for everyone involved long-term, because we all need to win or else it all falls down. And then we're back to the same thing that we all set out to try to fix in the first place.
100%.
There's Tom, this is not a hit at you at all. This is just like a generalization of something that I've come to. Now on the other side of this is I get a lot of funds. It could be venture, it could be PE, calling me, asking me about companies or things that I know. And it's so interesting me for how little the investors know. I'm always just like, they literally know nothing about this space, or their assumptions are completely wrong. And then when I see these huge rounds close, I'm like, or even huge acquisitions that should never have happened, I'm like, what happened in that room? Like, I would love to have been a fly on the wall.
Totally.
But that to me is like the most shocking thing, because I remember going in pitching, I was like, oh, they know everything. That's why they don't like me. That's why they don't like the business. That's why they don't like the product. That's why they don't like the team. No, a lot of people don't know anything. I think what they're really looking for is, can this be a business? Is there a return on my investment? Right?
Yeah. And there's something, I think, objectively advantageous about that. I know probably kind of frustrating to an entrepreneur when you're talking to someone who just doesn't get it, or might be like a blank stare on the screen, like, wait a minute, what are you talking about, right? But I think if done right, I think it can be objectively advantageous, particularly if that investor comes with contacts or has other advisors they can bring you into and an ecosystem built around them. But I generally, to be honest with you, I'm a former entrepreneur. I co-founded a company, spun it out of university, and sold it to a large multinational, spent a little stint with that multinational for like 6 months and did the whole rigmarole. I personally feel more, I'm not saying I'm a serial entrepreneur and I'm not an expert like you all, but I do get a better sense of what you're going through, because I've raised money and it was painful, and I almost lost my house actually because I wasn't paying myself to go pay other employees, right? And I think there's character building in that, as well as knowledge gain, that you cannot teach anybody in any form factor.
No, that's wisdom, right?
Yes,
like, you got the scars.
Yeah. I'm partial to other investors with entrepreneurial experience, and maybe you all sort of see that, because maybe there's an investor you're talking to and they're like, well, they actually get it. I guarantee they probably have done that before. I'd
say from my perspective, I'm a big fan of VCs that have operators.
Yes.
Right.
Yes.
Right. than bankers.
Yes.
Because they're very different. They're very different.
I would second that. I think every person that I think of that I like or would recommend or go to for capital have done it before or have experience.
Yeah.
If you just come out of an MBA program, and you've never done anything, you're
Don't give us advice.
Yeah, I think banker venture. Don't even get me started. You could do a whole thing on this because that's essentially. So you think about the history of venture capital. It was all traditionally. It was initially designed for operators. Like it was only for operators,
Right.
engineers who started something, commercialized it, and decided, hey, we could go do this again. Bunch of ex-Intel folks who decided to start a fund. That was the essence of what venture capital was. And then at some point, when Silicon Valley found out, hey, we need more money, they contacted folks on Wall Street, started raising tons and tons of money. And they're like, oh my gosh, we've got too much money to deploy. Let's hire capital allocators. And that's where the bankers kind of play a role in that, right? And so, and it's there, I think there's a place for everyone in the industry. I think capital allocators bring a certain skill to the table that provide maybe guardrails, but you cannot do it without the operator VCs.
Right.
I think you need both, right?
100%.
Yeah, it depends what stage you're at too, right? Like when you're VC, that's very different than when you need a Series C, Series D.
That's right.
Everything's different, and it's a game, and you have to understand the game and understand all the players and how the game is played. And I think it's much easier if you think about it that way too.
Right.
Yeah, if you're like, hey, I'm at a really nice, I'm at $50 million in ARR or 30 million, and help me remain solvent, but get me the cheapest capital you can find. Structure or restructure my business in a way that will give me the maximum amount of rocket fuel without sort of diluting on my founders or just maintaining solvency. That, hey, a banker could play an interesting role in that
100%.
equation. But
That's their skill set.
That's a different skill set. Yeah.
I had bankers helping me in my process, not like formally, but just people who took an interest. And interestingly, those bankers also had operator backgrounds. They had
Cool.
So
Nice.
they were crucial to helping me make decisions and just guiding me behind the scenes. So I'm not anti-bankers. I just think if I'm going to work with somebody in the future, if I ever did it again, I definitely lean towards people who've gone through this journey before.
Right.
You just get a different perspective on life.
It's sort of like the right tool for the right job, right?
Yeah.
Yes.
So as we come to the end, would we like to do a takeaway each, wrap up kind of today?
Sure. What does that mean? What do you want us
Yeah.
to like? What
More guidance.
we learned, or what we want to tell the audience?
Yeah.
Yeah, just sort of what you feel like after this conversation we've had, just sort of ahas, anything, Tom, Kristen, either
Yeah.
you, we have some time.
Yeah, I'm always terrible at these like closing thoughts. So I'll go first. So that way I don't repeat what others say. But, I think, look, in general, I stick to what I said earlier, which is, look, if you're out there fundraising, know who your audience is. I think key learnings from today are, look, if you're early in your journey, you're sort of day one and you're really trying to figure out that fundraising landscape, you're probably a better fit with venture capital investors who have operational experience, right? I think look at folks' background and find those folks who are operators. If you're later in the journey, you might want someone like Jennifer described. She had great experience with a banker on the sort of tail end of selling her company. There's a fit for folks at different stages along the journey. Just be reflective about where you're at and what your needs are, and go find an investor that fits that need.
Yep.
I would agree with that. I would say my only, addition is, and the advice that I like to give is, if you find somebody who went right before you in your space, who knows what's current, who's who, what potholes to avoid, really stick close with them and get their advice as you go along that pathway. I mean, I think there's a lot of really smart people, but if their operating experience was 20 years ago, the landscape is different now. So find somebody who's closer, just one step ahead, partner with them, stay close. And because I think everybody's journey is different. I think sometimes VC makes sense, sometimes PE makes sense, sometimes strategic makes sense. And it depends on the business and the needs of the business. But I would say find somebody that you can get close to that's just right ahead of you. So one, it's not so, Ophir said alone, that you have somebody to go through the journey with, but also somebody who has already been through the part you're about to go through that can guide you.
I would say if there's founders, first-time founders watching this, always be grooming your data room. I think
Yeah, totally.
it ends up being like such a time sink. So like whether you're seed all the way to exiting, maintain that the way you maintain whatever spreadsheet you're obsessed with. You should be obsessed with that because it could get you to a quicker yes that you maybe would have lost because you had too much time putting it together.
Nice. I'd say for me, I have two things. So one is make sure that the founders that you are signing up with are people that you want to spend long periods of time with and can help you on the upside and the downsides. And then on the context of specifically going into healthcare and building in healthcare, I believe that the most important thing that you can do is build trust.
Yeah.
Build trust with all levels, because that is critical to your success.
Well, man, this has been an awesome day, awesome conversation. And until next time, friends, I'm so glad you guys joined us, really.
Likewise.